Since 2014, we've seen a buy signal on the Bitcoin hash ribbons indicator triggered only 12 times. In all cases, Bitcoin moved up after this signal, providing an average return of 52% in the following 3 months. And in most cases, Bitcoin continued to move even higher after the 3-month mark. Such a move today would put Bitcoin at $120,000 by the end of June this year, and potentially even higher prices in the second half of 2025. Now, although all readings were successful in the near term, in 2 cases, the rallies were killed by fundamental forces. These 2 failed signals occurred in December 2019 and August 2021. In 2020, so 3 months after the December 2019 signal, the COVID pandemic caused a massive sell-off across risk assets. Bitcoin fell by 50% during this period. And in 2021, the Fed announced that they were going to raise interest rates to bring down inflation. This again caused a sell-off across risk assets and marked the top on Bitcoin before an 80% decline over the next year. So in both the failed signals, the 3-month rally following the signal actually came to an end because of an external catalyst, like the pandemic or the Fed. Many will argue that the trade war today is that kind of catalyst that could take Bitcoin down despite the supply squeeze dynamic. But the difference is that in the 2 failed signals, so here in 2020 and here in 2022, the fear and uncertainty came about 3 months after the hash ribbons buy signal. Today, we are seeing the exact opposite. The recent buy signal has occurred after a period of extreme market panic and historic levels of uncertainty, and that too at a time when global liquidity is rising. These are factors that we've highlighted in our recent crypto videos and have historically proven to be very constructive for Bitcoin. This is why we are leaning on the most recent signal being a successful one. The caveat, of course, is that things could always get worse if no meaningful tariff deals are reached and the US economy goes into a recession, or if trade tensions with China escalate, potentially leading to a sell-off in risk assets. And if that's the case, then we could hypothetically see Bitcoin rally for the next 3 months before reversing, similar to the 2 failed signals. That is why risk management is key in such a market environment. In the near term, Bitcoin has broken out above its downtrend line and also managed to hold above the 300-day moving average, which has defined this bull market so far. This is quite promising for Bitcoin and could mean the supply squeeze is playing out right now. However, price still needs to clear the $97,000 resistance zone before really getting into a bullish structure. And at that point, we would start expecting new all-time highs on Bitcoin, likely within the next 3 months.